Welcome to another episode of mishtalk TV. I'm your host, Mike Shedlock. I'm here today with Gary Brode at Deep Knowledge Investing. We're going to discuss inflation. We're going to discuss the JOLTS jobs numbers that came out today. And we're going to discuss an investment idea related to Bitcoin that Gary likes. Many of you know my views on Bitcoin, but we're going to give you an alternate view today. And there's a bit of an arbitrage factor in this as well. So there's a couple of ways to win with this trade. Gary, welcome to the show. Please explain your idea today on this Bitcoin trust.
Thanks, Mish. Great to see you. Thanks for having me. I appreciate being here. So the idea we want to talk about today is the Grayscale Bitcoin Trust. The ticker is GBTC. It is a closed-end fund that owns Bitcoin. And so it's a way for people who maybe don't know how to buy Bitcoin, or they need to own, they can only own things in a brokerage account. They need to have a ticker that they can use to buy it. And right now, that trust trades at an 18.5% discount to its net asset value. So if you buy the Grayscale Bitcoin Trust, you're basically buying Bitcoin at an 18.5% discount. And that discount has been substantially reduced over the last 2 months. Just 2 months ago, the discount was about 40%, 44%, something like that. And today, GBTC was up 17%. And the reason for that big move is it appears that Grayscale is going to win their lawsuit against the Securities and Exchange Commission, the SEC. And the reason for that lawsuit is Grayscale has been trying for a couple of years now to convert the fund into an ETF, an exchange-traded fund. And once they do that, they'll be able to destroy shares and ensure that the fund trades at net asset value. So as soon as you have that conversion, you will lose that 18.5% arbitrage, or rather, if you own the Grayscale Bitcoin Trust, GBTC, you have the chance to basically right now buy Bitcoin at an 18.5% discount, and that should collapse once the ETF is approved. What happened today was the court came back and ruled against the SEC and said, yeah, you need to allow them to convert to an exchange-traded fund. We believe that the most likely thing the SEC is going to do is, now they have no choice. They're going to have to approve the GBTC fund, but we think they'll also approve a couple of other funds, such as the ones proposed by BlackRock, by Fidelity. There are a few others. A number of the very large legacy financial firms have filed for their own ETFs. And so just to give you a sense of what we're talking about here, current Bitcoin issuance is roughly 900 coins a day, and times the current price, you're looking at issuance of about $25 million a day. That is the current creation of Bitcoin value on a daily basis. That'll be cut in half next year. And so BlackRock alone has $10 trillion of assets under management. If they were to allocate 50 basis points, 0.5%, that's $50 billion that would be moving into a market where your issuance is 25 million a day. So if your supply is relatively fixed or can only go up by fewer than 1,000 coins a day, and there's additional buying pressure, I think it's reasonable to assume that as firms like BlackRock, Fidelity, Citadel start to buy billions and billions, maybe tens of billions of dollars of Bitcoin, the price of that asset is going to go up. So combine that with the ability to buy GBTC at a discount, and you have two ways to win on this trade.
What was the ruling today? Wasn't it that not that they had to allow this ETF, but they needed to re-review it, sort of subtly saying, you know what, you really don't have a case, look at it again? What was the exact ruling today, Gary?
Yeah, so we have not had a chance to do a full legal review of the ruling, but I believe that you're correct. The SEC does have the ability to drag their feet or, try to find another way around it. The issue is at this point, there's very little incentive for them to do so. We believe that the firms, again, like Fidelity and BlackRock, had reason to believe the SEC would approve their ETF applications. And so think about the optics for the SEC, where they approve Fidelity, they approve BlackRock, they may approve 2 or 3 other of the applications that are submitted, and then tell Grayscale, who's had an application in for over 2 years at this point, no, we're going to keep you guys on hold despite a favorable ruling. It's just not good optics for the SEC. So you're right. They do have other options to drag their feet. We just think it's not really in their interest to do so. And the most likely, I want to use the word punishment, that the SEC can hand to Grayscale would be to say, okay, well, you guys have been trying for years to get this ETF. We're going to approve it, but we won't give you first mover advantage. We're going to approve the competitor ETFs at the same time. And, I think Grayscale was hoping that they'd be the only game in town for a while and establish themselves in the minds of investors as the place to go for the ability to buy Bitcoin directly in a brokerage account. And so, our best thought on it is that the SEC is going to respond by approving everybody rather than trying to keep Grayscale on the sidelines.
For Bitcoin, we'll see what they do about other things, whether they view them as securities or as commodities, which is central to all of this. But it's been very annoying. I've not been a Bitcoin fan, but you don't have to be a Bitcoin fan to understand there's an arbitrage issue here. And if you think that the SEC is going to approve this, then there's a lot of money to be made off the arbitrage. Now, I have to apologize to everyone because Gary wanted me to do this interview about a week ago, but I'm involved in moving to a brand new house. I just got moved in. This is my first podcast from the new house. I just was not in a position to do anything. So our timing here on this announcement is not perfect, and I apologize for that because Gary's been on top of this long ago, pointing this out to deep knowledge investors, and I did not pass it along. And today, out of the blue, we have this SEC ruling. And it would have been better for this trade to have this discussion before this ruling came out. But once again, how much arbitrage is left in this trade, Gary, right now?
Yeah, there's plenty left. And Mish, you're so kind to talk about the timing. Deep Knowledge Investing subscribers had the chance to buy into this 2 months ago at a price that was 41% below the current price. So we had people buying this at $14.50 2 months ago. They've made 40% in a couple of months, which is great. But don't let that discourage you. If you're listening to this, just think about it. Let's break this up into a couple of ways of thinking about it. If you are, and Mish is right, he's said all along, he's not really a Bitcoin fan, and that's totally fine. For those of you listening to this who are Bitcoin fans, great. This is the opportunity to buy ahead of billions of dollars of institutional demand. And that's a great place to be. And for the people who are Bitcoin believers and want to buy at a discount, the arbitrage left is still more than 18%. And that's a great return on an event that really does look like it's happening. So that would be a great way to play it. And then for those of you who lean more in Mish's direction and think, Bitcoin is not maybe such a fantastic investment, you still have the opportunity to buy ahead of two things. One, ahead of billions of dollars of institutional demand, where you're not going to be able to issue additional Bitcoins. And then you also have the opportunity to buy GBTC at almost a 20% discount. And so, if you're hearing about this for the first time, don't feel like you missed the trade. Yeah, there were additional profits that could have been made before, but that was yesterday. I think there's still a lot of money to be made in this trade going forward. So don't focus on, what you could have made yesterday. Let's, look forward on what I think is still an outstanding investment opportunity right now.
Thanks, Gary. There's a downside here. I mean, we're talking about an arbitrage. If the price of Bitcoin were to collapse here, that arbitrage might not mean much to you by the time that the SEC comes out and actually approves this trade. There's a chance for sell the news. But there's also a chance to win both ways. There's a chance to win on the arbitrage, and as a result of what Gary expects is additional money flowing into Bitcoin, simply because people have an easy way to buy Bitcoin now. The Bitcoin community itself probably doesn't care much for these ETFs. They want everyone to hold their own private keys. They don't trust anyone else, and there's a lot of reason to not to trust anyone else. But I'm guessing if anyone can do this right, these ETFs are not going to be hacked. Do you have any comment on that, Gary?
Yeah, I do. I think you're right. I think the Bitcoin enthusiasts, the people who, the Bitcoin maximalists, they'd prefer that everybody owns their own Bitcoin and does their own custody, self-custody. By the way, for anyone listening to this who's nervous or worried about the idea of self-custody or saying, wait, I don't know how to do that, and what if I screw it up? Deep Knowledge Investing has a step-by-step guide for how you can self-custody. And I went through the process myself. I took tons of screenshots. Literally, we have made it as simple as click here, fill in this number, fill in this box, click here. So that's available. But one of the great things about Bitcoin, Mish, is that you don't need permission from anybody else to do what you want with it. You can buy and hold. You can trade it. You can hold it in an ETF. You can have somebody else hold it for you. You can self-custody. Whether the rest of the Bitcoin community approves of these ETFs or not is irrelevant. Bitcoin is permissionless, right? You don't need permission from a government, a regulatory agency, or your mother to own Bitcoin. So it's available to everyone, everywhere around the world. And, people can do what they want with it. And there's no need to ensure that everybody likes the way that you buy Bitcoin, the way that you hold Bitcoin. I also think, you brought up a really important point, Mish, which is we should talk about the risks here, right? And there are basically two risks that we should talk about owning this. One is that Bitcoin is volatile, right? It went recently from, more than 65,000 down to under 15,000. And
15,000.
Yes. And if you take a look at the price history of Bitcoin, it's been a huge winner and gone up over time, but there have been multiple massive drawdowns. And that is something that happens with Bitcoin and probably will continue to happen for a while. The second risk is there is event risk, right? We think the most likely action by the SEC is to approve 2 or 3 or 4 of these ETFs all at once and sooner rather than later. But that doesn't mean they're obligated to do that, right? The SEC can decide that they're going to keep rejecting these and send it back to court and delay. And if they do that, then not only do you not capture that arbitrage, but you may need to hold GBTC longer because that discount could increase. And just 2 months ago, the discount was more than 40%. And so there is regulatory risk here. There is event risk, and people who buy this should be aware of it. Now, we think, what we're seeing from, again, companies like Fidelity and Citadel and BlackRock, the reason they're doing this is because they think it's going to work. And these companies have a phenomenal track record of getting ETFs approved. That plus the court ruling today, we think this is likely to happen, but it's important to discuss risks with people and to have them understand, if you lose money, this is how it would happen.
Well, the reason they're doing it, Gary, is they just want a slice of the pie. I don't know if they think or even care if it's going to work or not, as long as, they're making some sort of commission or cut on trading this ETF for people. But let's go back to, where to hold it. And the same issue applies to people with gold. I've got an account at Gold Money. I have perfect trust in Gold Money. They're not going to confiscate my gold. But, there have been cases where people have held their gold with places that were not reputable. And guess what? They lost their gold. People lost tons of Bitcoin off of some exchanges for, fraudulent purposes. And so it depends on, where you have your trust. There's also people have lost literal fortunes in Bitcoin because they lost their private keys, and there's no way to get that back ever. So there's all kinds of these risks. Personally, I would not have a problem holding this ETF if I wanted to have Bitcoin. But you just be aware that you're going to be bombarded with all kinds of views on this, and you have to decide for yourself where to hold your gold, where to hold your Bitcoin. And there's numbers of ways to hold gold that I trust. There's a fund, OUNZ, by Ounce, by Axel Merck. I have 100% faith in OUNZ. You can even take physical possession of your gold through Ounce if you want to. The other people want that gold in their possession 100% of the time. Of course, there's a security risk now of someone stealing it. It's not that easily, silver especially is not that easily transportable. It can get heavy, although gold is a little bit different. You can pack a huge amount of money's worth of gold in a tiny little cube, something you can't do with silver. But all of these issues people need to decide for themselves. So we're just having this discussion here, about, where you want the custody of this and who you would trust. And most of the exchanges, I have to say, Gary, I certainly would not have wanted to have my Bitcoin on those exchanges. Would you agree with that?
Completely. Yeah. First of all, everyone listening to this, please do not keep your Bitcoin on an exchange. I think owning GBTC is a safe way to own it. I think owning and self-custodying is a safe way to own it. Again, if you don't know how to do that, we'll send you the guide. I've put it on Twitter. It's available and really easy to follow. But Mish, let's talk about the issue that you're bringing up, because it's an important one, which is how do we keep ourselves safe in an uncertain financial landscape, right? And one of the key things, and one of the reasons why I've diversified my holdings, is there is no perfect method. So let's talk about 3 different ways to store wealth and the benefits and risks of each one of those, right? So a lot of people will store their wealth in dollars, in US dollars. They've got bank accounts or they own treasury securities. And that, that's been a good answer, but there are a couple of problems with that, right? One is the Fed and congressional overspending. We've had a massive increase in the money supply. It's leading to inflation. And Congress has made it explicitly clear they're not going to stop debasing the dollar. So if you own dollars, you own something that will lose purchasing power pretty much every year. And that is going to continue for decades until the dollar completely crashes. That's just the way these things work. That's the way they've worked for thousands of years across all kinds of currencies. The other risk to owning the dollar is we could end up with capital controls. The government could simply say, you're an American citizen, you own dollars. We're going to bail you in. We're going to take some of your money to bail out the banks if there's a problem, or if you want to leave the country, you don't have access to it, right? I mean, we've even seen all kinds of limitations on people who just want to get their money in cash. The bank at this point can say no. And I've heard all kinds of stories of people trying to get less than $10,000 of their own money out of a bank, and the bank they're just saying no. So those are risks.
You can't get it in cash.
Right.
And quickly, we're going to come to the point, like it or not. We are coming to the point of a totally cashless society. And you can see it. I emptied a piggy bank just for a personal anecdote the other day, and I had way more money in this piggy bank. It was like $100 or something. It's just sitting there. Every time I used to go to the gas station, Gary, there was a minimum fee or a minimum amount you could charge. So if you went in there to buy a candy bar, that was usually under the amount, so you had to take out $1 and pay. Now, there's places that don't even want cash. They don't want to handle cash. It's credit card only. You buy candy bars. They're no longer a nickel like when I was growing up as a kid. They're $1.59 or whatever. But the transaction limit used to be like $5 or something. So a candy bar or an ice cream bar or soda, when you go inside the gas, I accumulated all these coins, threw them in there. We had a hard time getting the bank to take those coins. We had to take them, roll them up. They didn't have an automated way to roll up these coins for anything. This is Chase Bank. I mean, seriously. But once all the accounts are digital, and they force all those accounts to digital, who knows what they can do with your money? They're telling you the means to confiscate your money, Gary.
That's right. And by the way, Mish, they're telling you what they're going to do. Right? There are going to be social credit scores. They're going to be evaluating the carbon intensity of your purchases. They will limit your ability to buy meat or fuel or products that they don't approve of. For those of you who might own firearms or want to buy ammunition, imagine, if they say, hey, we respect your Second Amendment rights. We're just not going to let you use the dollar to make these purchases. There are all kinds of things. And we saw it in Canada. A year ago, the Canadian truckers, right? Justin Trudeau froze the bank accounts of people who were peacefully protesting. Now, whether you like the message that the truckers stood for, the reason for their protest or not, doesn't matter. The government has made it clear that if we don't like what you're doing, we will cut off your access to cash. That happened in Canada. Don't think for a minute it won't happen here. It absolutely will. And so I would urge everybody listening to this, please do not have 100% of your net worth in US dollars. It's just not a good option. So let's talk about two other options, Mish. One is gold, and gold it's a great thing to own, right? It has been really the definition of money for thousands of years now. But there are issues with gold, right? You talked about if you want to self-custody gold, right? You've got it at home, you run the risk that it could be stolen. Or if you were to leave the country, trust me, they will find the gold on the way out, and
they'll find your Bitcoin if it's in an ETF too, Gary.
We'll get to that because there are ways around that, right? There are ways around that. And so, you've talked about the companies that will hold your gold for you. And you're right. There are some fantastic, reputable companies that will hold your gold in a vault. And I think that's a great way to own gold. But just be aware that in the case of a serious emergency, it may not be possible for them to send it to you. If we have more lockdowns and they shut things down, or there's widespread unrest, riots, your UPS driver or your FedEx driver may not be making it to your home to drop off your gold. And that doesn't mean that there's anything bad or wrong about these companies that will custody your gold for you. It just means there are conditions where it may be impossible for them to return your gold to you. Now, it's not, they're being honest, but things can change. Now, you're right. If you own GBTC in a brokerage account, the government they can confiscate your brokerage account as easily as they can confiscate your US dollars that you hold in your bank account. But that's where self-custodying comes in, because you can actually own Bitcoin on the blockchain. And as long as you have access to your keywords that will unlock your Bitcoin off of the blockchain, it cannot be taken from you. You can go from country to country, and without physically carrying anything, you get to another country, you get to another place, and you can basically download your Bitcoin. All you need are those 24 words. Now, those can be written somewhere. They can be memorized. There are ways to do that. And so what I would suggest to people is start to think about owning a variety of insurance right? And so, I own a lot of individual stocks. I'm also short indexes. I'm long volatility. There are all kinds of things I've done to hedge my equity risk. I think the U.S. dollar is in for a rough ride. It's going to be losing purchasing power as Congress overspends by trillions of dollars a year. Everybody's focused on, I think now it's $33 trillion. That's our national debt. But that's not the key issue. The off balance sheet liabilities of the United States, we're talking about pensions, Medicare, Medicaid, Obamacare, all of the Social Security. That adds up to over $200 trillion. The liabilities of the United States are $250 billion. That can't be paid. Right? The only way that's going to be paid is by excessive money printing, and that'll lead to inflation or a loss of purchasing power. I also own gold. I think owning gold is a great thing, but I don't want to keep it in my house. I also own Bitcoin and GBTC because there is no perfect way to safeguard your wealth. I would suggest
You
to
also
people,
have a number of, a lot of my readers, Gary, and we've discussed this offline, are really interested in the energy sector, and I think basically they're right. And what's your feelings? Give me your feelings on the energy sector.
I think owning energy at a time where the world's reserve currency is experiencing inflation and where Congress is insisting that they're going to continue to overspend, I think owning energy in that situation is a phenomenal option. The other thing I'd add, and this is something, Mish, that you've been writing about a lot in the last month, and I love your pieces on the energy policies in the United States, in Europe. But what we're seeing is worldwide, there is increasing demand for energy. China and India, that's almost 3 billion of the 8 billion people on the planet. They want a higher standard of living. That means a more energy intensive lifestyle. And so the demand for energy is going up every year. But right now, the two most efficient ways to produce and deliver energy are carbon fuels, right? So oil, gas, and then uranium, nuclear plants. And those aren't being built very fast. And you have all kinds of regulations and green energy policies that are limiting production of carbon-based fuels. And so what we have is increasing demand, but without an increase in supply. And so I think pricing is going to reflect that. So I have a huge energy portfolio right now. We're long enormous amounts of energy all throughout the supply chain on that. And I think it's a great thing to own during inflationary times.
I'm going to have Gary back on. This is a note to all my readers here, to specifically to discuss some of his energy plays. I know a lot of my readers really, really love that sector. I totally understand why they love that sector. We can't change. One of my readers, I'll even mention him here, Papa Dave, hello. One of my readers constantly says, Mish, you can't change what these guys are doing. I want to know how we make money on this. So I'll have Gary back on. We'll discuss his energy plays for all of you interested in that sector. But one of the things that, just like really strikes me, and I've not seen any mainstream analysis of this, is that what we're doing just doesn't scale. I've never heard anyone else say that than me. It doesn't scale. One of my readers said, well, Mish, my Tesla gets the equivalent of 100 miles a gallon or whatever. I don't know how he derived that, but let's say it's 300 miles. Okay, so what? What happens when Biden or the EU or Canada, or actually we'd have to take Biden or the EU, someone big enough, to come by and say 30% of the cars or 50% of the cars or whatever percentage of the cars have to be EVs. No one has scaled what it's going to cost to produce all of those minerals. And we look at places like Indonesia, which controls the supply of a mineral that goes into batteries. Indonesia is talking about export controls on the minerals that it produces. We are without a doubt in a monster big trade war with China, and at least 80%, is it 90% of the processing of rare earth minerals and stuff that goes into batteries happens in China. So even if another country has a supply of minerals that are needed to produce batteries, the processing happens in China. Why? Because China doesn't give a crap about its environment. If it needs those minerals, it will produce those minerals. These minerals won't be produced in the United States. It takes 12 years to get a plant up and running, and that's just in a normal basis without all of the NIMBYs not in my backyards and environmental protesters who on one side are demanding, and this is the irony of it all, demanding we do more about the carbon production, while forcing this production to happen in countries where they're least concerned about how they produce this and how much carbon they use to produce it. And even in China is still producing China is the global leader in EVs, but guess what? To supply that electricity, they've resorted to building more coal mines. None of this scales. None of this adds up. It all looks like a big inflationary mess to me, and that's the path we're on.
Yeah, Mish, I completely agree with you. You've made three key points I'd love to address here. The first one is when people talk about these EVs being good for the environment, one of the things that they're ignoring is the lifespan of a battery pack is about 7 years. So when people are talking about, oh, I get the equivalent of 100 miles to the gallon or 300 miles to the gallon or whatever it is, they're ignoring the fact that in 7 years, they're going to have to replace the most expensive and environmentally damaging part of that car. That's the entire battery pack. And by the way, trying to repair a cracked lithium is extremely energy intensive and not economically viable.
Yeah,
So
they're making the assumption that this stuff is recyclable.
It's not.
But to keep down the costs, they are purposely making batteries to make them as cheap as possible in a fashion that makes it harder for them to recycle.
That's exactly right. The second point that you made that I want to emphasize is people who say, I'm getting the equivalent of 100 miles to the gallon in my Tesla. The other thing that they're ignoring is the amount of diesel fuel required to mine lithium and cobalt and nickel and the other elements that go into these battery packs. These are enormous mines. You need gigantic diesel-powered equipment to get this stuff out of the ground and to process it. And all of that is being excluded from the calculation. In order to be in a position to get that, claimed 100 miles to the gallon, you need to release enormous amounts of carbon into the atmosphere to produce that car. And so people talk about these being zero emission vehicles. That is 100% a lie. They're zero emission vehicles at the tailpipe. But to build them and to build the battery packs and to fuel them or charge them requires a huge amount of carbon-based fuel, a lot of diesel. The third thing you mentioned, you talked about your readers at Papa Dave. I got to tell you, I'm already a huge Papa Dave fan because he has encapsulated the investment philosophy of deep knowledge investing. Mish, I started the firm in January of 2020. And, within a couple of months, the entire investment landscape changed, right? We had COVID and we had lockdowns and everything changed overnight. And, I just started the firm. I'm up checking the futures markets at 3 a.m. My interns are sending me information, 3, 4 a.m. We were working around the clock. And my view on this is we're going to roll with the changes. I don't like this discussion of it's a good market, it's a bad market. Oh, we're not making money because the market's bad. You know what? If you need the Fed to go to 0% rates and $9 trillion of quantitative easing to make money, then you're not a good money manager. You're not able to deliver value. At Deep Knowledge Investing, our view is no complaining. Whatever the situation is, we don't say it's a good market, it's a bad market. We ask one question every day. How do we make money for our subscribers? How do we do this now in the market that we have now? There's no sense in complaining. Let's just figure out what do we do next. And so to that end, I think Papa Dave has the exact right approach to this stuff. And I promise you, we will be back in the future with energy-related ideas, ways to produce, store, and transport energy. And we'll be talking about that next time. And so Papa Dave, that'll be for you. Hopefully you'll be tuning in. It'll be the.
I think he's going to be shocked by this
That's right.
video cast. I mean, it's just something that popped into my head, as I thought I'd bring it up. But here we go. To you,
he's
Papa
right.
Dave, a video cast right up your alley here. Although hopefully you stayed through this and we got past the Bitcoin discussion. But Gary, I was hoping to talk about some, inflation and deflation and what the Fed is doing and all that. But I think I'm going to cut it right here. I don't like overly long videos, but also I want to propose one other thing here. For all of my subscribers, and by subscribers I mean people who get my emails and have subscribed to mishtalk.com and who get my daily emails or as once per each post that comes out. I'm going to once a month, perhaps a little bit more often. This will be up to Gary. But whenever he produces one of his free newsletters, I will also get that new newsletter out to anyone who's a subscriber to mishtalk. So not only will you get my emails, hopefully you like them, otherwise you're not a subscriber, right? I will periodically, not too often, once or twice a month, get out an email from Gary. Gary, how's that sound?
That sounds great. We'd love to have what we're talking about in front of more people. Our last monthly letter actually came out last week. We talked about issues with fiat currency. We talked about possible sovereign debt defaults. And then we talked about the earnings of some of the companies that we like. We basically had an outstanding second quarter for the companies that we own. Basically, everybody beat earnings expectations, raised guidance. So we had a really good quarter for the companies that we follow. And we gave people an update on that. And so if that is of interest to your readers, we'd love to get our work in front of more of them. Thanks.
Okay, Gary, thanks very much for coming on. I think we've covered a lot of topics here, and we're going to have more ideas coming up. That was Gary Brode at Deep Knowledge Investing. I'm Mish. And thank you for watching another episode of mishtalk TV. Subscribe to me on my blog there. And if you do, you'll also get Gary's newsletter. Thanks much.
Thanks, Mish.